Hello, everyone, and welcome to another episode of the A&H Berts Stockpickers Podcast with Albert and Hubert.
Here, each week, you can join us in discussing our favourite stocks where we can help you find your next investment opportunity.
We aim to present and discuss the investment thesis for our top picks.
Let's get right into this week's choice.
Right, so this week, it's me on the hot seat. And last time I was presenting, I covered a nice mid-cap stock. And today we're diving into something in the small cap space along very similar lines of an investment thesis. We're looking at a company which has got great returns, great cash flows, and isn't too expensive. Today I'll be covering a wonderful little company called Supreme PLC, and it's not the clothing company, as some of you might think, but it's in fact a little niche distributing brand in the UK, which has four main divisions. It has a lighting and batteries division, where it distributes branded batteries. It has a sports and wellness part, and what I'm going to be focusing on, which accounts for the majority of, the highest proportion of gross profit for the company, is the vaping sector. So let's get right into it. This really is a pretty good small cap. We're looking at something with a 212 million market cap, so pretty tiny. Only IPO'd last February. And my three sort of key points for today are going to be looking at sort of predominantly the core product line, which is that vaping sector. I think it's got great potential for growth and is going to be a real leader for the company going down the line. Moving on from there, I think it's a company which requires low capital and it's got great returns. And I think that's very sustainable for the long run. And then finally, I think this really presents as quite a value-esque pick. It's not too expensive. And I think we could see some re-ratings coming up. So on to my first point. Let's have a look at the vaping sector. So currently this accounts for about 45% of the gross profit. That's 2020 figures there. And it does own the UK's leading vape brand, which is 88 Vape. And by leading, I mean it has 30% of the market share, which is pretty significant. It puts in quite a strong position. And that's simply in terms of, number of sort of revenue, in terms of revenue size. But if we look at simply products bought, due to the brilliant price position of their product of vape, which is only £1 per little bottle comparative to, £3 to £4 or even more for some other brands, it actually completely shoots out the competition in terms of sold units sold. So we have this, great grounding in the vape market. And what I think is really significant about it, I think this is going to be a real driver of growth moving forward. And that has got some, key points to it. So my first point is, I think the biggest driver of growth for this company down the line is going to be that vaping sector, which currently accounts for around 45% of the 2020 gross profit. And it currently owns the UK's leading vape brand, which is 88 Vape. This accounts for about 30% of the market share, which is a pretty significant portion. And it entered the market in 2013, completely new to the vaping sphere, joined the market when vaping was still a relatively niche idea and a niche alternative to smoking, and has grown that business significantly to capture 30% of a pretty strong market. And why do I think this is going to be a bigger driver of growth? Predominantly, it's got to do with the fact that, over the course of time, I think we're going to be seeing more and more people quit smoking. So about 7.1% roughly of UK adults currently use e-cigarettes, and that compares to a 14.4% still smoking regular cigarettes. This is down from about 20% in 2011. So, if we follow that trend, we can see estimates from places like Euromonitor, which forecasts that the market for vape is going to grow at 11% CAGR to 2024. So a significant growth for the market. And seeing as Supreme, and 88 Vape currently has the market share, I think this is going to lead the industry forward and is going to capture a significant proportion of that growth, as it has done so in the past. My key reasonings for this, I think, are number one is actually the regulatory side. While people often like to speculate that, vape is going to get regulated out of existence, I think the early regulation is actually quite a positive to Supreme. Entering in 2013 when advertising was still possible, they were really able to capture that market then and get that big proportion. And from sort of looking at the market research done into the vaping market, it seems like a pretty sticky product. Once people commit to a brand, they get addicted to that brand and stay with it. It's very similar to how cigarettes, ended up going when there were certain bans on advertising of cigarettes. What ended up happening is that the incumbent firms, Philip Morris, Imperial Tobacco, all these other firms really did quite well off it. They ended up sort of dominating or continuing the domination with actually no threat to competition, because no new company feels the need to, or really wants to join a market which feels so tightly regulated. So basically, we've already seen these barriers of entry pop up. You already have certain bans on advertising indoors for vaping. And, I think 88 Vape will sustain that 30% market share. And, currently it's very difficult to compete with. It is the cheapest product on the market at £1 per little bottle of vape. We're talking about refillable vape here, not the e-cigarette reusable sticks. And that contrasts to the next cheapest, which happens to be around £3 for things like Logic. And, even if they were able to be competed, by price, the evidence shows from what Supreme did before with its old brand Keek, when Keek was not selling particularly well initially, and they tried to move from Keek to 88 Vape, they started to drop the price of Keek, put it on sale, actually undercutting 88. And still, the data changed not very significantly at all. People stuck to their brand despite how much it costs. So given the fact it's a 30% market share and, the barriers of entry are coming up, I think people are going to stay with their brand. And due to the low price point, the new entrants into the market, those quitting cigarettes and moving to sort of e-cigs and vape, are likely to actually start with 88 Vape, given its lower price point. And given that cigarettes, one of the big incentives for people to quit smoking beyond health is actually the price point. So that's going to be my main thing. I think that could be a real driver of growth. And we've already seen this brand really being quite a favorite in terms of contracts. It received a massive prison contract in 2020 that accounted for about 2.5 million. And we can see that go up even more over the next few years. It's the prisoner's favorite contract as well. And having a sustainable contract is good for a business like this. It sustains these revenue streams. I mean, Albert, what do you think about the vaping market? Do you think it's going to continue like this, or are we going to see it regulated out of existence?
Yeah, so I think that that one reason that I am hopeful that they won't be regulated out of existence is that, at least for now, the current position of the NHS in the UK is that, yes, vaping is a valid alternative to smoking, and it endorses vaping as an alternative to smoking, which I think is quite powerful, because it means that the government, won't see vaping as something that needs to be restricted. Instead, they'll see it as a way to reduce the public health problem of smokers. But one thing I could see happening, especially in the environment now, post-COVID, when the government is looking to increase revenue, is higher taxes on vaping products. I think that, obviously we know how high the taxes on cigarettes are, but do you think that it's possible that the government will look at vaping products, which is, eating up a huge portion of the tobacco, traditional tobacco products? Think it's possible that the government will look to vaping and institute taxes there?
I think there is a real potential for that. I mean, currently, like you said, the NHS pass it is on the NHS website as a potential alternative. I mean, currently, I don't think the NHS completely endorses the product itself, but we could very much see the move into them actually fully endorsing and recommending it rather than just having it on the website as an alternative. That would be really strong for the market. I mean, in terms of the potential taxation, I mean, yes, there is a potential for that. A lot of things are getting taxed now in a post-COVID environment, and vaping does seem like an easy target. I think given 88 Vape's strong position as currently the cheapest product in the market, that will certainly help, especially with percentage, VAT tax style taxes. It'll be the smallest price increase for the product, and it'll still remain the cheapest product in the market. And being addictive, how the elasticities are for these products. It's unlikely to, go to a level where people can't afford it. And it's still probably going to be cheaper than cigarettes, which will still bring cigarette smokers back in. I think if anything is going to start getting taxed even more is cigarettes. Every single year, the price has gone up. So I'm not too worried about that. I mean, from an ESG point of view, this does have a slight dichotomy, because on the one hand, this is an alternative to smoking that seems to be currently healthier. People do tend to believe this is a great way to stop smoking, and it is a lot healthier according to the current research. But we do have to be careful, on the ESG side about, there were some scandals of brands like Juul, and now it's gone to Puff Bar, of teenagers and underage people using vaping products, which could, shine a bit of a bad light on it. But I think given, Supreme's position in the market, selling actual professional but cheap grade bottles of vape fluid, it is unlikely to sort of capture the teenage market in the way Juul did, with their lovely flavored little easy to use pods. So I think we should be safe in that respect. And I do quickly want to touch on one final thing before I move on. While I said it's cheap, that might sort of turn some people away, saying, well, if it's so cheap, probably a worse off product. But realistically, due to the European standards and the UK standards of what can go into a vape, pretty much all of these products are nearly exactly the same. They have the same ingredients. And the only difference is the branding and the price point. So it's a product just as good as the others, but it's far cheaper and is capturing a big market. So with that being said, I think I should move on to my second sort of driver in this investment thesis, which is actually the company itself and its raw financials. Beyond the potential driver of growth, I think, like I said last time, a company is only worth sort of holding for the long term here. If it's a great company that generates great returns for itself and for its investors. I mean, currently we're looking at a return on capital employed of 84.1%. Now, it's not quite as high as Games Workshop's was, but you have to bear in mind, Games Workshop is an insanely established business with absolutely no competition. And for Supreme being such a small company with the potential of having quite a significant amount of competition, that does actually bode really, really well. It's an exceptionally high return on capital for such a business, and that is really promising down the line. And, alongside that, we have a business which is actually pretty low on its capital intensity. What would be quite worrying is for a business to require constant monitoring of capital, which would bring down their return on capital over time. But yes, it's pretty low on capital intensity. Again, pretty much nearly all the manufacturing currently happens in the UK factory, although the big prison contract was exported out to China briefly, just because it was, they couldn't quite deal with the supply, but they are slowly integrating even the big contracts to be able to be produced in the UK factory, which is really, really strong. And, when we're talking about margins here, we have a pretty decent, fixed cash flow margin of around I think it's around, we're looking at high single digits to sort of low double digits for the free cash flow margin. But it's that EBITDA margin which is significantly over 10%, which a lot of classic investors will say companies with an EBITDA margin of over 10% really look good. So they are pretty profitable companies. We're looking at something like a 40% gross profit margin. So yes, despite the cheapness of their product, they still manage to generate money off these products. They keep their costs low with their in-house factory and integrated supply chain, which in a way also protects them from certain supply shocks, as we have seen currently is becoming a real problem in the UK. So they have an element of resilience to that. And I just think, why not invest in a company with brilliant financials, like core financials themselves, that has the potential to grow? You don't see many of these companies anymore, especially it's difficult to find them at this size. A lot of these small starting up companies in the small cap space tend to be these super high growth companies with very little to back up the case in terms of actual figures. But here, like I said, great return on capital employed, great return on capital invested as well, which is really key. So we can see them growing organically themselves through reinvestment, and not to mention the ability to bolt on any new acquisition very easily. Due to the sort of structure of the firm, it's really pretty diversified, and it seems to be quite good at bringing on new projects, as it did with vape and as it did with the nutrition and wellness side, which is currently the fastest growing sector, but it still accounts for a very small amount of the business. It has grown around 103% in the last 3 years, which is really positive as well. Alongside that, this is what I think is the more sustainable vaping growth side. I mean, that's the key thing for the business itself. And I think the real reason for investment now, rather than, waiting a while and seeing how things kick off, is the fact that currently it is a very, very cheap buy for what we can see. You know, a lot of these, it's a sustainable growth company with you know, revenues growing at around 15, it grew 15% in 2020, revenues grew 30% in 2021. And you know, EBITDA grew in the high sort of teens. So for a business growing so much, why on earth is it, you know, trading at a current 12 times price to earnings multiple and a 5%-ish free cash flow yield? Those are exceptionally low multiples. And I think, you know, given a catalyst of continually strong results over the next year or so, we could really see not only the company growing, but the company's stock price re-rating. I mean, Albert, what are your thoughts on that?
I think the main question here is how long can it continue this growth for? I mean, those are very good multiples that it's trading on, but I mean, ultimately the vaping market is large, but it is only 20% of the population that use nicotine products. So what I'm wondering is, and there's high brand loyalty as well. So people that are vaping tend to stick with a certain brand. So my question is really, you know, how much further does it have to grow, and how long can it keep gobbling up more of the market before it then starts to encounter resistance from, firstly, a limited number of vapors, and secondly, the people that are vaping tend to be committed to a single brand already?
Well, yes, that's the point. I think seeing as it already has a large market share and high commitment to the brand, that will, you know, maintain the vapors we already have, and you know, they'll stay. You know, it seems to be the case that when you start vaping, you end up vaping more and more as you go. The addiction progresses. You can very easily get through a bottle, I think, in like, I mean, not necessarily a day, but at least a week. You can get through a single bottle a week, I think. And I mean, given its competitive price point, I think that's going to be a big attraction to new vapors who then become loyal with the brand. And also, it is actually sort of expanding its distribution network. So recently, you know, it was only available in Asda in terms of big supermarkets, otherwise in sort of budget stores like Sports Direct or B&M. But now, you know, really positive sign, it's now being stocked in Sainsbury's. So we can see signs of it, you know, expanding its distribution, which again should capture even more, I'd say, a greater demographic of users. And, you know, in terms of the multiples, you said they were good multiples. The one thing I think I should add is, you know, it's all good and well for me to actually come and say that, oh, it's cheap, therefore we should buy it. But we have to understand why it's cheap. And I think the biggest reason for that is, one, it's a new company. It's a small company. And I think the market hasn't quite got the faith in this product. I think that's due to a misunderstanding of the management in many ways. Let's bear in mind, this company tried to IPO previously and it failed. The reason it failed was because investors were just, you know, in disbelief about the potentials for growth that the management were going for. They said it was too ambitious, it was never going to happen, and they lost faith. Well, what happened afterwards is that despite the failed first acquisition, the company itself completely smashed its own estimates out of the water and outperformed insanely, you know, leading to quite a good, successful second IPO. But I think a lot of the market still is quite cautious about, you know, a company that's just come to market with management that's been used to the private sphere and not the public sphere. So I think people might find the management a little bit too cocky. They might not have so much faith in such a small company, and they might not have, you know, the reach being so small and only covered by one analyst.
There have been some issues with the CEO, and that especially projects sort of a lot of confidence. But obviously, a lot of people might say that he's in fact overconfident in his business, and you know, this in the future could lead to some problems, you know, especially when it comes to having to deal with you know, the shareholders on the public market, and that down the line we could see some clashes in how different parties think the company should be run.
Yes, I mean, that is one of the key risks of the investment is actually sort of landing on the management. I think from a pure business perspective about the company, whatever people have said about the CEO, I think he goes by Sandy, has been wrong. He has outperformed. He has outperformed superbly. It's a company of outperformance. But he is still adapting to the behavior of a public company and not a private company. And I think with time, all businessmen want their companies to succeed, and he wanted to take it to market. He was keen to take it to the market. And I think we should see a little bit more conservatism from the management team going forward, and hopefully less boisterous behavior. That being said, it is a key risk. We don't want them to become too overconfident, but the divisions they're jumping into seem to be quite stable investments. And they invest in the vaping market early. It paid off. They're now investing heavily in the vitamins and wellness sector, and it has grown pretty well since it started, and that's a big growing point as well. So I have faith in the management, despite the market having less so.
Yeah, that's true. I mean, you can't argue with the results that he's produced thus far. So I guess that going forward, we've seen that his approach has worked, and so it will hopefully continue working into the future as a publicly traded company.
Exactly. And I think with these, you do have a lot of potential. The small cap space is uncovered. It's not owned by that many institutions. If we look at the institutional holding of the company, we're looking at sort of only a few big houses hold it, like BlackRock does, Lazard, and Fidelity, but it's not incredibly institutionally owned. And I think there is potential for that to be the case once this, gains some more momentum and some more traction amongst investors and starts expanding out. And overall, I think that pretty much covers Supreme PLC. An interesting one, a small one. I don't think there's too much more to say on that, unless you have any finalizing points.
Well, I have a point about potential competition, which is that a lot of the big established tobacco firms, who, after seeing a lot more regulation in countries, especially in sort of Western Europe, have now tried to move into a new area, which is e-cigarettes. And these are big companies, especially I'm thinking of here Philip Morris, which has invested hugely in the e-cigarettes. So my question is Supreme, when faced with these much, much larger companies who can afford to invest huge amounts of money into their products, how will Supreme's products fare when it's faced with this competition?
Interesting point. And I do have some data to sort of look at that. I mean, we've seen Philip Morris enter the market, and we have seen Imperial Tobacco also enter the market. So I'm sure a lot of you are familiar with the Blue brand of vape. It's stocked in pretty much most shops. And that does seem to be, in terms of pure retail value, seems to be the next best thing to 88 vape. But when we look at things like Philip Morris, that actually is one of the worst selling, mainstream e-liquid brands. But it's not just the sales value. I think we have to look even more at the simple number of e-liquid bottles sold. 88 vape sold about, I think this is 2019 figures, sold around 45 million 10 ml e-liquid bottles. And when we compare that to its next competitor, which is the Imperial brand's Blue, that only sold 10 million. So it is a really big difference. And people are committed to the 88 vape brand. As we've seen, brand loyalty is a massive thing within vape. And, despite Blue Imperial and, the Vivid Vapor from Philip Morris coming in, seeing as these aren't Marlboro, they're not Marlboro, they're not Camels, they're not Benson and Hedges. These are completely new brands invented by what are established companies. They're still new brands. And they also need to capture the market like a new brand, like a new company. I think given the stickiness of customers to the Supreme product, which is 88 vape, I think they will struggle to do so despite their massive size. The only advantage I think they really have is the ability to distribute more than Supreme, but that hasn't been a problem yet. And with that, I think the key points here were we have a strong driver of growth being the vaping side, even potentially the wellness side. We have a company with great figures, great financials. The fundamental business is performing well, and we expect it to do so in the future as it reinvests the great cash flow streams it has. And I think it plays in as a lovely little value pick for the sector with potential re-rating as results continue coming. And the last results were very good. But, once we start to outperform beyond the COVID season, that could really be a catalyst for a re-rating. And I believe that is the main thesis. I think we've discussed both sides of the argument. And with that, we really hope you enjoyed this week's discussion, and let us know your thoughts.
Do it again.
And with that, we hope you. I'll do it. What's it? And with that, we hope you enjoyed this week's discussion, and do let us know your thoughts on this week's pick. It is a bit different. It's new. It's small. Probably the first time a lot of you are hearing about this. So yeah, comment on the YouTube video. Let us know in our social media, and send us any question you'd like answered in the next episode.
See you next week for another episode.